Welcome everyone to the Real Life Trading Swing Trading Floor, where our mission is to enrich lives. My name is Brad Reed, and I am a real life trader, and I would like to encourage you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. What is going on, party people? Hope y'all are all doing well. I just noticed that my the Iron Condor for SPY is not on here, and JD is not on here, and I lost some lines. That's all right. That happens. Welcome, everyone. We'll put them back on together. Hope you guys are all doing fantastic and awesome. Thank you, Francisco. Good to be here. Good to be here. Hello, Lydia. I know who Lydia is now. Groovy. All right. Well, folks, thanks for signing in. More people are logging in. Let's go start with and just see how many of my lines have disappeared. All right. So we got PayPal here. The other day, so PayPal is an active swing trade. The other day, Jeremy raised the stop up to 76.75, and we had a another bullish candle, made a higher high with a higher low, very slightly. But yeah, climbing on upwards is a good thing. Just for kicks, what does it look like in the post market? All right, sideways. Looks good. I don't see any adjustments that need to be made there. Probably won't, but I wouldn't mind if you wanted to take 10% there and maybe 10% there and the rest way up there. I think 2R from the original setup is somewhere right in this range. I personally did not take this one. I didn't know about it, but I would have traded that breakout right there. So as we go and look at trades today, know that when a stock has made a big move, I want to see a wiggle, a consolidation. So for me, let me zoom in a little bit so you guys can see what I like to look for. When I see a big move like this, like a lot of stocks have done, the question is, when they start putting in these bullish candles, is are they going to bounce and go higher, or are they going to retrace? Now, Jeremy took PayPal, I'm guessing, because although that did make a lower low, the bullish volume is winning. And this candle right there, at least for me, was the sign that, hey, this thing is serious and it is going to go bullish. So a little rest, consolidation, catch up, use those moving averages, and you do get a fairly decent reward risk if it does wish to roll off of that resistance. So I'll be looking for this kind of pattern for entries, whether we're going in the bullish direction or the bearish direction, but that's kind of what I look for on a swing trade. Let's go. Okay, so PayPal, it looks good. No adjustments I think need to be made right now. Fossil looks great. Now, I am not on this one either, but I am very strongly considering getting in maybe there, maybe there. Yeah, probably not going to wait that long. Maybe trim that one really tight, like a 1462. Yeah, I think 1462, 1463 sounds about right. That still gives me a pretty terrific reward risk ratio back up to the top of this. Again, that consolidation pattern that I look for is this. Love the volume on that candle. Love the volume on that candle. And really, it's today's candle that makes me think that this thing is going to go bullish. So again, I don't think any stops adjustments need to be made on Fossil, but for if there are any of you like me who are not in 1462, I'm not sure I'm going to take that just yet, but maybe if it breaks higher than this wick and then comes back down to 1462, that may be my trade. I'll have to see. So Fossil is definitely high up on my watch list, but again, I'm not in it. Advanced Auto Parts We also have trades open on that. It looks pretty fantastic. Once again, I think Jeremy took this trade because the bullish volume seems to be winning. Yeah, and it's making higher lows, right? Making higher lows, making higher highs. I think it goes. I think it bounced. Let's see. Earnings already happened. Any chance it's gapping up in the post market? That would be super nice, right? Not much activity in the post market. A lot of buying came in though. All right, we'll see. But yeah, I'm more bullish than bearish on advanced auto parts. I might consider something like that, but the reward risk just isn't there. United States Steel. We are filled on this one, got filled yesterday. Unfortunately, I am also not in this one. For those of y'all that haven't traded with me a lot, I just don't do a lot of swing trades. But making higher lows, making higher highs, this thing looks terrific if you're in it. I would like to see maybe a close above this level before we move that stop up. But even if we get a big upper wick tomorrow, it's going to be hard not to raise the stop up to there and take a little more than half the risk off the table. If y'all want to do that now, raise your stop to there. I don't hate it. This 10 moving average, I believe, should act as support. And let's just check on some of the oscillators. Stokes and RSI, I believe they should have rested. Yeah, both the stochastics and the RSI are back into that sort of neutral zone. Looks good. Looks good. Some of y'all may see that and be worried about a little bit of divergence. I am not. All of this means is that the momentum is shifting, right? And this thing had an absolutely monstrous move. So the speed from that A line that I have there and the B line over here, that's B. Wow, that's really bad letters. Anyways, whatever this astronomical star constellation is down here, the fact that the speed has slowed down would cause this pattern to emerge. And we can clearly see that it is slowing down. So the question is it slowing down because it's going to roll bearish, or is it just resting? And I very clearly think that it is just resting. This is very clear divergence, and you can see that the slowing down is really because it doesn't need to rest, it just is, and of course that happened. There's the divergence playing out right there. But yes, in summary, I am not concerned about that as divergence. B bands, really wide, both bands now angled up. That is a great sign if you are in a bullish trade. Groovy. Ooh, also like that 20 line. That 20 is the simple moving average, and that is in our favor. So we've got some nice moving averages that can be acting as support. We need to be sure. We need to be sure before we raise our stop and take some of those potential sources of support away. Again, I think a close somewhere above here would suck that 20 up far enough that we can raise the stop to there. So if that happens tomorrow, hold me to it. That's what I'm going to be doing. Mickey D's, McDonald's. Jeremy, I believe last Friday, had a bearish trade set up on this one. I am going to officially cancel the McDonald's trade setup. So let's see. Do I do no, just a swing trade, right? Swing trade. Gonna officially cancel McDonald's bearish trade setup as the risk reward just got changed and it might go bullish a bit. All right, so that is canceled over here. That's day trades, swing trades, current month. Mickey D's, I'm going to change that to cancel. And another thing, I saw a headline earlier today that said McDonald's experienced one of the most bearish runs it's had in 10 years or something like that. Basically means that that whatever just happened is completely shocking. McDonald's is a fantastic business. Whether or not you like the food, the business model is incredibly sound, in my opinion. And I think there's going to be a lot of people that see this as an opportunity to buy low. At the very least, I think this sort of bullish retrace continues up into this area. And if any of those scenarios happen, it would mean that that bearish trade setup probably is no longer a good idea. If you want to adjust the stop up to there and continue to take it bearish, of course, I encourage everyone to have their own trading plan. But my trading plan says to wait on McDonald's. Here's an article that says it has an overarching bullish story. Here's another one saying how to treat yourself to McDonald's for years to come, basically buy low. Here's another article that says why you should buy McDonald's on the dip. So again, I think there's going to be a lot of investors that see this as an opportunity to buy on McDonald's. In fact, I'm not going to do it. I want more of a wiggle, but if you want to do a buy limit to take that thing bullish, I think that is not a bad idea. It's just had such an incredible bearish run that I believe a lot of the folks that are in bearish are going to be closing out. And by the folks that are in bearish, I mean they sold to open, so they should be buying to close. And I think that folks that buy on value are going to see McDonald's as an incredible opportunity to buy low. Robert says it was a great day trade today. All right, Robert. Very nice. Congrats. If you are really, really good at bull put spreads, playing defense, you could consider selling a 145 and buying either the 142.50 or the 140. One thing that I like about a very tight bull put spread like that is that if you're right and it goes bullish to sideways, you make pretty good premium. But if you're wrong and this thing comes down, you're going to need a lot of capital to buy back the short put. But this long put should go up in value very, very quickly. So again, you need to have practiced that and you need to be good at it because you can lose money very quickly if you don't do it exactly right. But who wouldn't like a trade where if you're right, you make money, and if you're wrong, you make more money? Yeah. But practice, because those are difficult to do. The timing and the defense has to be impeccable. All right, so McDonald's, tell you what, I will keep it on our watch list, but I'm scooting it on down. KEYS, and I have lost my line. So KEYS is a bullish trade looking to buy the dip at 48.17 by 45.86. Style. So it was a bullish limit buy at 48, what was it, 17? And then 45.76 was the stop. Sorry for not having these lines up. I promise I did them when I was done with the afternoon show today. I don't know if I turned my computer off too fast, or usually it saves automatically. My fault. At any rate, this thing is running pretty nicely. If we're going to get filled on this, we need to get filled quickly. This is exactly the type of wiggle that I love to see. And my entry, yeah, would have been, 1 penny above that. I might have been looking for a little bit more of a break, but I think you guys were trying to get this on the pullback. Yeah, this is almost exactly what I look for. Tim says, yes, all right. I love this setup. If it goes too far, I may have to cancel it and I'll have to think about what is too far. Usually for me, an hour and a half, 1 hour to an hour and a half is too far, and it's at 1 hour right now. So I would love a lower wick and for this thing to continue. If it does, let's go ahead and just take all at 2R on that one. 2R's at 52.79. Did Jeremy talk about a target plan with you guys? Two R seems to be a pretty popular way to go. And if you've ever wondered why a lot of times we take things at 2R, mathematically on the risk side, it means we only have to be right 33% of the time to break even. But if you're familiar with Fibonacci or Elliott wave theory, if that is going to be our risk, 2 times that is about the reasonable target. So that's a lot of the reason why we almost always just take all at 2R, because the size of the pullback usually determines our risk, and then our reward is going to be a run of 2 times the size of that pullback. I just noticed beautiful falling rising 3 pattern, rest after battle, or you can call that a bull flag, whatever you call it bullish. I like it. Baba, ooh, I missed my lines. Either that or y'all's bull put spread on Baba is so low and so far away that my charts just said, Brad, you don't need those lines. That's insane that y'all got filled that low. 160. So the bull put spread on let's see, BPS 160, 155. I think this looks phenomenal. No reason to make any changes at this point. Looks great, looks solid. Pets is another bull put spread. Lost my lines. Pets, sorry, 35 naked put, not a bull put spread. This one, oh yeah, this one's fine. Naked put at 35. Coordinates 35. Save. Looks good. Yep, no worries on that one. British Petroleum, maybe it was DDD and ACIA that I started to have a little bit of concern. TLT is next. Let's talk about TLT first. And my phone is vibrating. Someone sending me a message. Brad, your audio's not working, something like that. Nope. No love notes. That's all right. TLT. This one looks like it's going to be tight, maybe a little bit 114, right? Yep, 114 by 113. Bull put spread 114, 113. Very extended in the bearish direction. Should go up. Granted, this is a 20-year Treasury bond fund, so there's a lot of fundamentals that will affect this ETF. But notice the how when the bullish volume did come in, it was pretty strong, and the bearish volume, especially today, was really low and pathetic. That's a bullish sign. So I would not be surprised if this thing even wants to gap up as far as there tomorrow and continue on up. So at least for now, that bull put spread looks pretty solid. One thing though, if you are in this spread on TLT, and it comes down to there, I suggest either just closing it out. It may cost you a little bit to close that out, but that would be my line in the sand, is the bottom of this wick, I think. Oh, nope, sorry. Let me take that back. 116.50 would be my line in the sand. In fact, I think there is even a line in the sand thing. Let's make it 116.49. 16.49. And if you do credit spreads, you'll know that the line in the sand is, is basically just a theoretical level at which we need to do something. Yeah, so that bounced at 116.51 there, 116.50 there, and 116.80 it looks like way back there. So yeah, if it posts 116.49, either unravel the spread or exit. But yeah, get out. Remember, the trick on credit spreads is not to lose big. You get a lot of these, they'll pay a little bit a lot of the time, but if you ever take a heavy loss on one of these, it'll wipe out your gains for months. So play defense, even if that means you have to take a small loss. Rock and roll. BP, British Petroleum. Would it be offensive? I can't even do it. Never mind. I was going to try and talk in a British accent. I do all right, but I guess not on the mic. All right, 37 is where y'all have a naked put. This one's going to be tight. If you want to own shares of British Petroleum at 37, then this is the one for you. Tim says, you thought I was British. British, Texan, pretty much the same thing. No, I know you're joking, Tim. You can't trade with me very long and not know I'm from Texas, right? Naked put, gonna be down there on around 37. Yeah, we're gonna leave that right there. And now, if you have this naked put, this means you want to own the shares down there at 37. Now it's real extended lag, and if it does get down there, I'd expect it to bounce off of that support. You know, there's a support there and a support down there, and yeah, if you can buy it down there, it should bounce off of any one of them numbers, and yeah, continue on up northern light. Come on, that can't be the first time y'all have heard my Texas accent. Heck, I use y'all all the time. I even know the difference between y'all and all y'all, right? One is plural, one is really plural. All right, so the SPY and the MU trades y'all closed out. Very good. DDD is next. And, yep, I had deleted these lines. Angela completely wrecked this one today, folks, on a day trade. And Angela got in something like that by that and exited right around in there. So if you ever run into her, get her autograph. Dang, Angela, that's awesome. You might need to go to church tonight, Angela. That was a little bit dirty. A little bit dirty. Great trade. Mila says I need to work on it. Work on what? My Texas accent? That is God-given. That is not worked on. All right, sorry, back to trading. D's, 850 naked put. Today's candle is absolutely glorious. There's a couple of folks that are in DDD bullish of some flavor between day trades today and swing trades, or this non-directional trade. So great job. Okay, catching up the chat pane. All right, very good. Yeah, volatility is coming. When does this thing expire? DDD, March. March what? Regular March. This shows earnings coming up very, very soon. Earningswhisper.com. DDD. Earnings on March 14th. That is before expirations, right? Yahoo, finance.yahoo. Robert says, yeah. All right. Let's close that out. DDD options. Unless you guys, unless you guys want to own that. All right, so March 16th. Yeah, March 16th. March 2nd would be the first one. March 16th, it is an 8.50 put. Let's buy it back for 8 cents. Oh man, you sold it for 10? All right. Swing trade. If you own or if you sold a naked put on DDD that expires March 16th, be aware that earnings are on March 14th. You can buy it back for a small profit, which is what I would do. You know what? If I say that's what I would do, I'm going to do it. Which is what I would do. Therefore, for the official trading floor documentation, I am going to record buying back the put for 0.08 cents. But of course, you should follow your trading plan. Basically, that's a really big bullish run up. I'm wondering if these are just aftermarket prices, because there's no way that thing should be 8 cents. No way. With that bullish run up, This is clearly the market maker maybe spiking volatility on this thing because of the earnings coming up. So if your plan was to hold it over earnings, that is fine. Jeremy did not fill me in on that plan. Let me see if there's news over here. Again, this is just one of the problems when someone puts in a, when one of us has a trade and has to pass it off to the other one. So, okay, I don't see anything there. So I'm gonna go ahead and call that closed out at 8 cents. Hopefully y'all can get a better feel than 8 cents. DDD done. ACIA. 35 naked put. This one has a pretty good chance of getting filled. I don't think Jeremy would have put it here unless he wanted shares. Well, I know Jeremy doesn't do naked puts unless he wants shares. Oops. But yeah, holding things over earnings is sort of a whole nother level of risk. So yeah, I think if this thing does come back down, there's a great chance that it bounces off of this long-term support zone. But I'm sure Jeremy has his plan for that one. JD, 36.35 bull put spread. Still looks really solid. BPS 36.35. And that goes at 36. No big worries about that one for a while. Now the SPY, there was an iron condor on this one. 238 and 285. 239 and 285. 239 is way down here. 239. And I'll just call that iron condor. 239. Just call it BPS. Bull put spread 239 by 238. And then the other side was a bear call spread, BCS 285, 286. So for those of y'all that do not do credit spreads but are curious, one reason folks like to have both a bull put spread and a bear call spread at the same time on the same stock is because the market maker, or excuse me, the broker does not charge you double the margin. The market maker holds back your margin for one of these, but not both, because it's very, very unlikely, aka impossible, for this ETF to be both above 285 and below 239 at the same time. So really only one of these is at risk. So you can get double the profit on the same margin. That's why people like them. But yeah, no worries about that one. So folks on the market, I know I've been calling for sideways. I think I've heard Latoya and Jeremy and Blake anticipate just some sideways to slow bullish run up on this. The ups and downs have been a little bit bigger than I have expected. I do think that will calm down. Notice the size of volume that we've had here versus the size of volume that we've had there. Lots of excitement when it dies down. So will the action. Notice the size of candles in through here, and notice the size of the candles in through here. Again, I think the excitement will die down over the next couple of days or weeks, and we'll go sideways. I think mid to late May, we make a lower high than that, and we kind of drift sideways, maybe a little bit bearish into the summer. We do have a midterm election in November. It'll be much, much smaller than the one that we had in 2016. But if there is going to be a switch of political party that tends to make the market go neutral to bearish because of the uncertainty. I'm not trying to make a political statement about one party or the other, but it's the uncertainty or the idea that things may change if another political party takes over that can cause the market to go a little bit bearish. So we'll keep an eye on that later in the year. DIA, kind of the same story. Yeah, same story. Expecting this to go sideways, trying to go up into late May and then slow down quite a bit. Justin says I sound like a politician. Justin, I have not said anything bad about you. I can't believe you. My feelings are hurt, Justin. I'm kidding, bro. I'm kidding. All right, QQQs, pretty much the same story as the SPY and DIA, maybe a little bit more on the bullish side. We might poke higher, and the reason I say that is just because that peak there was so close to that peak there that we might go higher on the Qs. Maybe some tech sector stuff pushes us over. IWM, granted, these are going to be a little bit of the smaller companies. So you guys might have figured out that I'm not a big fan of politicians. Midterm elections are coming up. Folks, vote your party, but get involved in the primary and get someone new. There, that's my PSA. Clive says, I hope I didn't miss the boss is away sale and giveaway. What do you want, Clive? I'll give something away. Yeah, IWM kind of the same as all the others, expecting neutral to sideways, slow action up until late May, and then we really run out of steam for the summer. Volatility is falling. Everything looks good. Let's go talk about some trades. This was a trade setup I had on Netflix today. Because it went bearish first, I didn't get filled, but it did hit my 2-hour target. Woohoo! So I was right on the where, but I did not take this trade setup. So if I take all my lines off, the question is, do we want to get in bullish on Netflix? At this point in time, I don't see a trade setup that I would want to get into. A pretty neat double bottom here, but the risk reward would have been probably enough for me to wait. I would have needed a little bit more of a wiggle to take that breakout. And the problem is, if we buy up here, you know, if we do this wave count, we're asking for the next pullback to come in and get us. So I'm going to wait just a little bit. Joseph had a setup on this one a little bit more aggressive than mine, and got skipped. Yikes. Hey, Joseph, better to be out of a trade wishing you were in than in a trade wishing you were out, right? I'd rather be skipped and it be a winner than get filled at an awful price or something like that. So Mila says, isn't it a retest gap? It is a retest gap, and that lower wick right there is the retest, at least as far as a day trade is concerned. We have a number of retest gaps in through here. Folks, as far as Netflix goes, I'll watch it. Mila says, I'm waiting for a retest for a swing level. Okay, so Mila, if it comes back down in here and it wiggles, in fact, if you get this right there, are you going to go in bullish? Because I will be going with you. Mila says, yep, me too. Camilo's looking bearish for a swing trade on Netflix. Okay. Camilo says it's too high. I agree. That's why I'm not going bullish right now. I want it to come back, rest, and then me and Mila are going to shoot for a bullish trade back up to there. Yeah, I like that a lot. Let's let this old support become new resistance one more time. All right, that's Netflix. Here is FTI. Well, let's see. I'm going to try and cover it. If I'm in Netflix right now, if I'm in and I'm holding shares, I do think a pullback is due. So if you want to lock in your gains, you can put your protective stop there. If you want to hold Netflix for a long, long time, your protective stop goes there. I believe if I were holding shares of this, I would be looking to sell some covered calls, maybe up here in the 340 range. Yeah, I like the 340 range. 340 range. What if you sold the 340 and bought a 280 protective put? I like that quite a bit, because if it does come back, that put's going to go up in value. Just because you have a protective put doesn't mean you have to exit the shares. You can, of course, sell that put for a profit and hold on to your shares wherever your protective stop is. Joseph likes Mila's idea of waiting for the pullback and the consolidation and then buying. All right. Robert says sell at 400 on Netflix. Ooh, that's way up there. Could get there this year, though. Absolutely. You can get $1.60 for the 400 covered call on Netflix that expires in April? Ooh. Dang. Sign me up. I'd just about buy some shares right now, so I could do that. But I can't afford a $300 stock. I can buy a share. That's not enough to sell a covered call on. Camilo likes that idea. Yeah, Camilo, if you're bearish on it, selling covered calls is a non-directional bearish thing. But remember, if you're wrong, it's kind of like a naked put. If you're wrong, it can hurt. Robert says 340 is $10.40. Y'all know I'm a short-term trader. I do mostly day trades. My swing trades are usually a couple of days, maybe 2 weeks. So I would probably sell the lower covered call, 340, 350, something like that, and get a tremendous premium and hope that I get paid a whole lot of money to exit that for profit. But that's me. That's why everyone has to have their own trading plans. FTI, looking at this for a swing trade. Some good volume today. The question is, do we want to do like a buy limit, buy low trade in here and want to take it up into this area for 2R? Right now, I'm going to wait. I want one of those wiggles, one of those consolidations before I before I do something like that. And I want that consolidation up here around this resistance. Because here's the thing, I would not be shocked if this thing broke lower, right? If all these moving averages come in and this thing trades back down into this support or into this support area. Let's get some more data on the chart. It definitely looks like that little trend, that little support line was broken. The bearish trend line looks like could be holding. So yeah, I'm going to be a little bit more bearish than bullish on FTI. Right now, I don't see a trade setup that I would get into. If I had shares of FTI, I'd have a tight stop right at about there. Covered calls, I don't think you're going to get much premium, but maybe a 33. The cool thing is if you do sell the covered call and it does go south, you get a little bit of extra bump, right? You get that covered call premium right before you exit your shares here. And of course, if it does roll down, then this covered call premium will go down very quickly, and you can buy those calls back and put some profit in your in your pocket, in your wallet. Joseph says, I want to go over PayPal. Okay. Morningstar reversal ish. Yep, I agree. I'm going to wait on FTI. PayPal. Got it up here. It's going to be in the recording, Joseph. So check that out first thing. I'm running long or short on time. If there's time at the end, I'll come back and hit it one more time. So FTI, if I had shares, covered call around 33 looks good. I would have a fairly tight stop. If I did not have shares, I was looking to get in. I don't really see a play I would make. If it breaks through there, maybe a bull put spread down here. If it rolls down, maybe a bear call spread up here. But really, I want to see it either wiggle up in here, or I want to see it wiggle down in there. And of course, then I can enter bearish there and get a nice target at that support. And if it goes bullish, I'll enter there with my stop around there and look for 2R right in this area where that gap is and that retest. So FTI, gonna wait for now. S&PS, this was requested. Again, I'm not sure if we're talking about going bullish or bearish. Pretty nice wiggle there, not gonna lie. I don't like all those moving averages in the way though. Horizontal moving averages like the 100, the 50, and the 20. When moving averages are horizontal, they are much less effective at resistance. But this has made 2 consecutive lower highs. It did make a higher low. I'm just not quite ready to go bullish on it. If it maybe wants to come up here into that 100 and give me a small little wiggle, give me one of these right there. I'm trying to look for other wiggles. Nice wiggle there. Nice wiggling through here. I just need a little bit more. And you know what I also see? I see the bearish volume is dominating. So this could be just a little bit of a bearish flag pattern off that daily 200, and we might continue bearish. At this point, I'm not ready to place a trade on S&PS. If I had shares, if I was a shareholder, I'd have a fairly tight stop either, yeah, probably down there. I'd be looking to sell like a 94 covered call, maybe a 95. But not ready to do a bull put spread or a bear call spread on S&PS. Hey Joseph, hang out if you want after the webinar, and I'll go over PayPal with you. Or tell you what, I'll just do it at the end one more time because I want to give you the chance to ask questions if you do have any questions. So nothing on S&PS. Apache Corporation. I think the question on APA was looking for an opportunity to go bearish on this. And overall, I think we're late on the bearish play. A really nice wiggle right there to take it bearish. And I love it coming into this support zone here. And this wiggle here showing me that old support is now resistance with these moving averages coming in. I agree that this wiggle here looks a lot like this one there, but the problem is I'm worried that this one is at the end of the bearish run. So could it go down some more? Yeah, but I think it's due for some support. And as I put more data on the screen, I see we do have a fairly strong support zone that we have just now entered. So if I had taken this, if I taken it bearish there, I could have my stop at break even. Actually, I'd probably have my stop really tight right now and be looking to exit for 1R gain. I likely would have had a target down in here. That would have been about 2R, I think. So I think for Apache, I am not ready to enter it bearish. I think there's a decent chance that this becomes exhaustion volume. Earnings just happened. Let's see if it can wiggle. Oh, you know what? I want this thing to come back and wiggle up here and make this an inverted head and shoulders. And we can take this thing bullish up into that area where these long-term moving averages are that might be some resistance. Does that sound like a plan? So I'm going to wait on Apache. If I did have shares and I was in bearish, again, I mentioned this seems like a fairly strong support region. So I think taking your profit anywhere in here makes a lot of sense. Protective stop either at the high of today's candle, maybe at the high of this February 26th candle. So like the low, like 2702 makes some sense. Let's see, covered, a protective call could also be in order, or a naked put. Remember not a naked put, a covered put. If you're trading bearish, selling the put is the equivalent of selling a covered call if you are in bullish. And basically that just means someone else that you will be buying shares to cover, and you'll be buying down there. Cool. Questions? Mark says, Apache gapped down and open to my winning entry, formed a Marabosu 5-minute candle. Still in it. So you're bullish, right, Mark? Is that what you're saying? Yes, okay. All righty. PayPal, also missed PayPal. Okay, Camilo, I will hook up you and Joseph for sure. So Mark, you're in bullish. I just said it's in a support region, so that's good. There is that 10 moving average right there, might provide some resistance. It could go down some more before it goes bullish, so I would be sure that you are pretty solid and tight on your defense. If you're in shares, this thing could gap down. So one thing to do if you're going to hold shares overnight is use puts for your defense. Mark says, ready to take profits at any moment. You rock, dude. You're on it. Very cool. Starbucks. Oh, man. This candle right here, try in your mind, memorize that and memorize that. Where I've got the pink line, to me, it looks like Apache. So you can do the video backwards and forwards, but today's candle on Apache, to me, looks a lot like that candle on Starbucks. So Mark, hope we're right, and Apache goes up, but that's kind of what I think. Okay, got a request for Riot. Man, I got 10 minutes and 10 stocks. Let's see. Let's do it. Let's get this thing going. Okay, so Starbucks, I am a little bit more bullish than bearish. I would be very hesitant about resistance there. So I'm not going to take an entry. A bull put spread, if you can get premium down here at 53 or 52, sounds absolutely amazing, like so amazing that I'm going to check it out. Starbucks. March 16th sounds good. What is that down there? 53, 52. Puts 53. Nope, no premium, no premium. All right, so the market maker thinks the same thing I do, that there's no money down there. If I was in shares of Starbucks, I would be looking to take some profit there and or sell some covered calls, maybe the 60, 61, because I do think it runs into some resistance at the top of this gap. If it wants to wiggle up there, do something like that, I might be looking to short it there. I don't know. Starbucks is one of those that's kind of like McDonald's, hard to short. So if I did have shares, a protective stop either there or there, and selling some covered calls sounds like a good plan. If I'm not in it, I am going to wait. Would love to see a wiggle between this resistance and these moving averages. And then I would love to take it bullish, because that's a pretty amazing reward risk ratio, right? If we can get our entry there, protective stop underneath those moving averages, 2R up there, yes, please. Apple has been very, very highly talked. So I'm going to be sarcastic here, folks. I'm joking about what I'm going to say. I'm joking. But I am thinking about going in bullish on Apple at around 181.02. And if I'm thinking about going bullish on Apple, that means y'all ought to sell everything. Get out. Panic, bail. Because I am horrendous at trading Apple. But I may go one more time. 181.02 by 181.10. Okay, folks, I am bad at trading Apple. I am bad. And I may be going bullish. All right? So that's my disclaimer. Trade your plan. Don't trade my plan. Okay, don't trade my plan when it comes to Apple. No, do not trade my plan when it comes to Apple. But this is what my trade would look like. Getting in somewhere in the 181 area with a protective stop down here below this little wiggle. You know what? Maybe because I am so bad at Apple, I'm going to get underneath that 100. Yeah. Ooh, I like that one. I like that one. I want at least 1 day bearish candle in here before this triggers. 1 day of a bearish candle before it triggers. And then I will not only do that in my account, I'll make that an official trade setup. How about that? Justin says, I have my sell order placed. Joseph says, when I said that, it just went down on the pre-market. Mark says, is that buy high and exit low? If I'm wrong, that's what it is Mark. That's what it is. But Apple has had an incredible consolidation here. It broke higher, got hammered for some mysterious unknown reason. And I think just like in a day trade, when you get a long lower wick, it clears out some of the holders. So I think a lot of people, if they were holding on to Apple, they had their protective stop there. Well, guess what? They got stopped out and they're looking for an opportunity to get back in. Let them get back in with me there. But yeah, a very long consolidation. It is now making higher lows. Love that little gap in there. Just had earnings. I think it goes bullish. That's my thoughts. Oh, Joseph was being serious. When I said that this morning in the trade, yeah, we talked about this in the day trading room. As soon as I said that, it went down. All right, nice. Nice. So nothing official yet on Apple. I want one bearish candle in there. If I am holding shares right now, I like the protective stop at 168.98, which is in this gap and below that daily 100 simple moving average. As far as selling a covered call, Maybe something super high. I'm probably not going to be selling covered call because I think it's going up. So yeah, I'm going to wait on that. You know what? As bad as I am on Apple, as soon as I get filled, I have to take a look and see if I'll be able to buy enough shares. I can tell you right now, I won't be able to buy enough shares. But I was going to say I'm going to sell a covered call, but I won't be able to buy enough shares with my puny little R. Wally World has had a, Walmart has had a pretty bearish run here into a pretty nice support area. So the question is this the bounce? I need more of a wiggle. In fact, I would love for it to come up and wiggle here, and then we can call this an inverted head and shoulders. We'll do an entry there, stop there, peel some off right up above there. That's about 2R if it happens. Notice the bullish volume down there. That could be short sellers buying to cover. It also could be traders going in long. This does look like a Morningstar reversal. Wish the second candle had higher volume. This 10 moving average could act as resistance because it has not been in that moving average for a long time. So I think I'm a little bit more bullish than bearish on Walmart, but I need some evidence. If I am trading at bearish right now, I'm going to have my stop below break even. So if you traded it there, hopefully you took some at that daily 200 and have your stop at break even. If I am trading it bullish, my protective stop is there. If I own shares, my protective stop is there. And I think selling a covered call, maybe like a 97 or a 98, makes a lot of sense because I think this thing is in for a battle for a while. Nitro says, could see an inside day candle tomorrow with that volume. Absolute. Great call, Nitro. I agree. I agree. All right, VFC is also on the list. Oh, man. That is tempting for a bearish play. Entry there. Protective stop there. That means 2R's way down there. I don't like that. Support region there and a really strong support region there. I'm going to need another one of these dojis. Oh, I need this 10 moving average down. That's what I need. I absolutely love that volume there because if that is bullish traders buying this to take it higher and it comes down, these folks right here are going to be losing money and they will sell to close out their trades, as will these folks. If this is bearish traders buying to close out their bearish positions as it continues down, they may open up their bearish position again, also selling down. So BFC going up very high on my watch list for a bearish trade. I need one more candle. I got to have that this 10 moving average down a little bit more. Would love to have that daily 100 as resistance. So very, very close, but just not quite yet. Joseph says day trade tomorrow. Oh man, if it opens there, yeah, buddy, I will be shorting that down into there. Yes, please. In fact, Brad's day trade list, let's put VFC and just Apple because I want to watch it for a swing trade. Yes, and Joseph, if I day trade that tomorrow and we make some money, remind me and I'll throw some frequent trader points your way. If I own shares now, I'm not liking what it's doing. I'm going to have my protective stop right there. Protective call up at 80 if there's any profit in that. If I do not own shares now, let's see, if I'm in bearish, protective stop is there. And if I'm in bearish, that candle at that level with that volume would concern me. So I would be looking to exit a bunch, if not all down there. So pretty much, I guess, blah, 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 blah. I see strong forces in both directions. Whichever one wins, I want to take. If the bullish direction wins, give me a wiggle at this resistance, and I will trade it bullish. If it wiggles a little bit more down here, then I will trade it bearish. All right, that is VFC. Home Depot's next. Kind of the same as VFC. Very strong support, consolidating, making lower high. If I am a shareholder of Home Depot, I am liking this Morningstar reversal, but I don't have a lot of faith in it. I don't have a lot of faith in it. I think this may be more just retesting the daily 100 simple moving average and or that exponential 10. I think we're getting what Dean Chance calls a SAMI, a sandwich effect between these moving averages and this support. And I think the support breaks and we take Home Depot down to that daily 200. So not quite yet, but I will move this to my bearish watch list for a bearish trade on Home Depot. If I currently hold shares of Home Depot, protective stop there, covered call maybe 192-ish. If I do not own shares, I would wait for a wiggle like that up in this area to take it bullish. And again, oops, I have it on my list, watch list. If it can wiggle down in here a little bit to take it bearish, it may need the rest of the week before that sets up. That's my thoughts on Home Depot. Lowe's, very interesting candle on Lowe's on very big volume. So let's see if Lowe's can come up into there and give me, you know what, give me this wiggle right there in between those two pink lines. That's what I want on Lowe's. And then I will take it bullish. That looks marvelous. 2R right up into there. We'd have all of these moving averages support. Oh, yes, please. Yes, please. So not quite yet on Lowe's, but we'll be watching it very carefully for something like that. If I'm a shareholder of Lowe's, I'm loving today's candle, and I'm putting the protective stop right there. Maybe sell a covered call at 54 if I can get it. Protective put down at 45 is not going to have any premium. If you're really good at defense, you might do a 48, 47, because if you're right, you're going to get pretty good premium. If you're wrong, you have a very easy unravel on Lowe's. Very easy unravel. Francisco says, is this a gap and go? I have a bearish candle there, and it gapped up. So I'd say, yes, it's a gap and go. It's not a, I would not call it a delicious gap and go because of where it opened. Yeah, it had a monstrous day, but that's a fairly inconsequential gap. Didn't really, well, it didn't even clear yesterday's high. It didn't get above that daily 200. I would not have given that a second look this morning. And with all these moving averages, that would have been a tough to day trade. But yeah, that is a gap and go. Now I'm madly crazy looking for gap and goes. Bam, there's a gap and go. Okay. Running out of time, Brad. Focus, target. I got 5 more stocks and I'm 4 minutes over. So I'm going to go fast. Target here, a little bit more bullish than bearish. If I have shares, I'm going to have a protective stop down there. Definitely want to peel some off there. This is a lower high, so be aware of that. If I own shares, protective stop there, covered call 84, something high because I would be expecting this to go bullish. If I do not have shares, it's going to be, maybe it's got to pull into that area before I'm looking to enter. So nothing on target for now. Nordstrom. Oh, Benny says target earnings before market tomorrow. So would love to day trade target if it gaps above there. If it opens in a magical zone. They're like really tight to that second pink line. I can get there. Gorgeous gap and go action if it gaps below there, and I'll trade it into one of these two support areas. Thanks, Benny, for that heads up. Someone's texting me. They're probably saying, Jeremy, Jeremy doesn't know how long I've gone over on this. Sorry, folks, for going long. I'm going to go fast. Nordstrom's just had earnings. I like an entry there for a bullish play, but I don't know where to put my protective stop. So I want this to come down and wiggle a little bit more so I know that I can put my protective stop maybe there. Would love to have my protective stop up there. But love this for an entry. Need to know better where support is if I'm going to take it bullish. I'm not really looking for any bearish setups right now with that kind of volume. If I own shares, I'm loving this action. I think if I'm long-term, that's about the tightest I can have my protective stop. If some reason I got in there and I move my stop to there, and that stop gets me above break even, that's where my protective stop is. Covered call is way up here in the stratosphere, 58.60, something like that would work. Macy's, much more bullish than bearish on Macy's. Love this resistance area here. If it were a day trade, I'm thinking that by that, but the problem is 2R is so far away. But basically, I want to trap anyone who shorted that candle. So I needed to come up here and wiggle. Man, these moving averages are really far away. Thinking maybe bull put spread, but not going to get any premium. Okay, if I own shares of Macy's, protective stop down here in the upper 27s, 27.90, something like that. That looks like a good target. Maybe covered calls in the 35 range. If I do not own shares of Macy's, I gotta wait. Gotta wait for a better reward risk. Riot was on the list. And after Riot, folks, I will end the recording, but then I will talk about PayPal, because there's a couple of folks in the chat pane that want to talk about PayPal. Resistance there, support there. I kind of like Riot for a swing trade. This is a gappy stock with big giant candles. So if you swing trade this, there is every chance possible that this thing trades down and looks incredibly bearish and then gaps up here and stops you out big. So play defense. We have tried to short this for day trading and we cannot. So if we can't short it for a day trade, we can't short it for a swing trade. To take it bullish, what does it got to do that I want to take it bullish? Really, I'm worried about resistance there. I don't know, folks. I'm sorry. I wish I had a better answer for you, but I don't know. Honestly, I am more bearish than bullish on Riot. But every time I've checked, in many brokers, it is not shortable. Maybe buy a put if it closes down there. I think that's what we'd have to do. If it takes out this level here, maybe enter with a put. To be honest, I will be waiting. All right, folks, thanks for watching this video. You guys rock until I get to trade with you again. Trade on logic, not on hope. Have a good one, everyone.